about one company that's been in the news, and that's Sibanye, and we're going to move that into our next conversation, which we're having with Peter Major. Of course, he's from Cadiz Corporate Solutions, and he joins us from our Cape Town studio to talk Sibanye as well as the BHP demerger with 32 South.
South32, I think.
South32, that's it. More likely. And of course, Peter, welcome. And let's just start off with the timing of this demerger. There's lots of analysts saying that we need to take into consideration the cycle in the commodity space. What do you make of it? Was this a good time for the demerger to go through?
Nozi, this is a big task, demergering. It cost them $800 million, and it's been over a year in progress. So I don't think we can be too critical of the timing here. I think they went as fast as they could, but there's so much compliance. This is the world's largest mining company. It's spread all over the world in different countries, different commodities. So the timing, whether it's fortuitous or not, it's kind of irrelevant, really.
But Peter, looking at the cycle, there could be a good argument to say at a time when commodities have been down, historical lows, lull in the cycle, a time to get in, because down the line, if a company like this has the right assets, they would say, I think, that they're going to be more focused in the management of those assets rather than from the global BHP Billiton commodity-driven sector thing. Maybe this is the right time to list and the right time to get into a company like this.
Well, I don't think it's a bad time to get into commodity stocks because they've underperformed for about 6 years. It's the longest stretch I've ever seen them underperform relative to the Aussie and the Indy. And most of these big commodity prices like oil, iron ore, platinum, gold, they're down 40, 50% nearly from their highs, especially oil and iron ore. So you're right, Dave. At least you're getting in a sector that's been punished for about 6 years, and there's a lot more cost cutting that can be done. And it looks like these commodity prices have found a level that they're happy to go up from rather than go lower. So yeah, it's not a bad time for a new buyer to get in, but the holders of South32 are the holders of Billiton. So yeah, they'll probably hang on to it rather than get out at the bottom at a 20% discount instead of the 10% discount to NAV that Billiton's currently trading at.
Now, Peter, and for new money, you say if you're calling the bottom of perhaps a commodity cycle here and you see prices rising here, where would you rather be going for new money? Would you go and buy South32 or are you buying Billiton?
I would buy South32. I would see what price it's trading at first. But I'm very sure while Billiton, Rios are trading at 10% discount, they're premium stocks. So they're trading about a 10% discount to their NPV, NAV, but South32 is going to be a mid-tier company, and it's not higher grade assets, it's lower grade assets. So yeah, I think it'll trade at a discount. Billiton today is trading at the highest level it's ever traded to the mining resource index. So if anybody thinks mining resource index is going to go up, Billiton's probably going to underperform that index because it's outperformed it so strong in the last 5 years.
Peter, let's talk a little bit about what South32 is calling a competitive advantage. They're looking at their low debt and they're saying this is going to give them agility and the room to maneuver. Is this something that would increase the attractiveness for South32 for you?
Yes, Nozi, it definitely would for me. I like companies with low debt because it means if they have a good project, they can go out and get the money pretty cheap, pretty easy. And boy, there's a lot more deals now than there were a year ago, 2 years, 3 years ago. So the low debt is a big plus. And it's probably going to be trading at a 15%, 20% discount to its underlying assets. That's another plus. And we're getting it when commodity prices have been falling now for 3-some years. So, and there's cost cutting to come. This is a little bit of a Sibanye mining house, I believe. So I think there's good cost cutting, rationalization still to come. And those are 3 very strong reasons I would be buying this probably over Billiton.
Of course, the other issue
I would buy this over Billiton as long as it's trading at some kind of discount.
Yeah, Peter, the other issue is they're exposed to the electricity supply, both reliability and not having load shedding, as we euphemistically call it. Now, there's a view that they should close down the smelters and that would relieve our grid of a lot of electricity demand, and then we could get going. So isn't that a risk for what was BHP Billiton in South Africa, but is now South32?
Dave, I think that's probably going to be factored in the South32 price. And those aluminum smelters are only operating, I believe, at half their capacity. And Brian Molefe tells us Eskom's going to come right. And we don't want to close any industries because of Eskom. So if Brian is only half right, and we're getting those assets at a discount, and they're only producing at half what they normally could, there's more upside in them than downside. But you're right, that's a valid risk.
Well,
investors have to take that into account.
You say Brian Molefe says the load shedding will be sorted out. I haven't seen Brian Molefe's wand yet. We interviewed him on Business This Week on Friday when he was appointed a couple of weeks ago. Very confident, but we need to still see, as they say, the jury is still out on Brian Molefe.
Absolutely, the jury is still out, and we've seen a lot of musical chairs at the state-owned enterprises in South Africa, but that's a conversation for another day. Right now, very big thank you to Peter Major and, of course, Gary Boyson, who gave us insights from the market. We didn't get to Sibanye or some of the movements around African rainbow minerals and the other mines.
But we talked about them the other day, and Sibanye down again.
Almost 20% this week, so that's a big move.